it is often best to wait at least like 15 to 30 minutes after market open to watch some of the stuff shake out. You don't want to try to catch something that's sometimes running or quite the opposite, catching that falling knife. It can be pretty brutal in both
I
directions.
think wait, just
So just
big with that. I think that there's a huge saying around earnings that a lot of times the first move is the wrong move. And I feel like that kind of, does for the market open as well. A lot of the times you'll have either a flash move, the market will open and then have either a big move up or down. By big, I mean point 0.2, point, whatever the percentage is. But then it tends to, work itself throughout the day. So that first move a lot of the time does tend to be the wrong move. Not always, but sometimes.
Yeah, it definitely can be. But watching SoFi right now, it's going a little bit farther down. It's about down 0.85% now. So going to continue to keep an eye on that. Another one that's actually down today and could present a buying opportunity. Something that I'm going to be keeping an eye on is going to be Nvidia. So there's a lot of talk about this stock over the last few months for sure. And it went up and hit new highs, and it even kind of came back to those highs pretty recently on the 23rd. But now it has gone and it is down about 2% today, back down to 216. This is an area where I do like it. I don't think it's going to get back down to anywhere near where that 200 day is, 191. But it crossed underneath the 50, it crossed underneath the 21 day simple moving averages. And if we could see a rebound through something like the 21 or the 50, those would give me a really, really nice spot for entry. Another one which has just been absolutely crushing it, something to keep an eye on, focus a little bit too heavy perhaps on tech or finance or banking, but there's some massive amounts of money to be made in commodities and areas like oil and others. So one of the ones that I've been keeping an eye on, this is really ever since that hurricane hit the Gulf, is Gush. So if you look at Gush, that's GUSH, that is going to be I believe that's a triple levered oil and gas ETF. And Gush is up almost 9% today. And it's on really a tear ever since it broke through its 200-day moving average back on the 23rd. It moved up from about $77 a share up to $90 a share, almost hitting 91 now. So continuing to watch Gush, that's on my radar. And let's see a
Wait,
couple of
guys, I
others.
think one thing with that one, I don't know if everyone else has been noticing this. I'm in New York, I drove to New Jersey, but like gas prices are getting pretty high again. It's to levels like I just remember during the pandemic and everything like that, like just looking at gas prices and it's like, wow, this is really cheap. And now I'm kind of getting to the other side of it where, okay, it's getting a little bit expensive at some places, but it's interesting that you can kind of see that firsthand as well. It's not direct, but it's just still a nice front in your face type thing.
Yeah, there's definitely been a carry through. Also, that Facebook option is now down 25% on the day. So we're going to just continue to keep monitoring that. For anyone who's unfamiliar, you can see the Bullish Rippers account actually in here up top. So Bullish Rippers, they're kind enough to actually sponsor a portion of this space where we do a option trade each week. And it was supposed to be kind of like a yellow option, but I feel like we've really been taking our time with it and really been trying to understand the options market. And we've been trading small caps and now large caps. So right now we're sitting in a Facebook $360 call. We purchased that for 455. It's now trading at 355. So that's down roughly about $100 in total, which is about 20% of the value. We'll probably cut losses if this comes down to about $300. But there's another 70 something dollars to go towards if we hit that. But shout out Bullish Rippers for allowing us to learn these lessons firsthand and not losing our own personal money. A couple of other names. So I know that it looks like three or four of the big names that I was watching are actually down today, and that's including Snapchat as well. Snapchat hitting new all-time highs, I believe, on Friday, which was the 24th. And now today they're down about 2.3%. I'm not too worried about this reversal yet. I think that if you look, there's very little past experience of buying up here. So if you go anything above $79, where Snapchat hasn't been too often, there's just very little volume. And sometimes that lack of volume when you're coming through from the Friday into the Monday could see a drawback as people move to take those gains because they're at all-time highs. So not terribly worried. I'm just going to continue to watch that. And if anybody has opinions on Snap or SoFi or Nvidia or any of these, feel free to tweet it at us. I wish that there was some type of chat inside of here that would make things a little bit easier. But these are all stuff that are on my radar. And then another one, which I'm just going to assume is not having a great day, is going to be Riot. Let's take a look at Riot. Yeah, so I'm also holding a Riot call personally, and this was trying to trade off of the crypto move. So obviously last week, China went ahead and banned crypto for like the 46th time or something. And I think a lot of people are getting less worried about that. It's kind of like when something keeps on happening, it can have lessening effect. But I was hoping that would see a bounce weekend for crypto, which was not doing too bad. I guess was up at 44 Bitcoin, that is. But today is slightly downwards.
Yeah.
What stocks are on your radar today, Evan?
So I was gonna say, just looking at this, it does look like a pretty down open. As many of you guys know, I have the ARC Daily account, which I can't get up here because I only have two phones. But so I just kind of tweeted out that we're live on there. So I was looking a little bit through the Kathy stocks and the Kathy names. I always find these type of days interesting where ARC K, the main ETF, is down, but Tesla is up. Just seeing an ETF where the largest holding, a 10% plus holding, is up that much, and the entire ETF is down is always intriguing. So I'll be watching that. It kind of just shows that the rest of the ETF is down, while Tesla is up. Couple things that could be making Tesla go up. I know that Goldman came out with they did lower their overall thoughts on the auto industry, but they pointed to names like Tesla and GM as names that could possibly outperform in this type of environment. So that's definitely on my radar. Facebook is always on my radar because of our thing and what we got going. Right now, I still have a Palantir call option open, which it expires in December. I'm up pretty nicely on it, so I was holding it a little bit, seeing if the gains could extend. I was really playing for $30, and we haven't gotten right to there yet. We've gotten around it, and I am probably looking to move out of that call. I still do hold some common stock, but I think it's time to take a profit in that area, and we'll look to do that soon. I see Gavin just joined in, so that could be a perfect person to ask about that. But overall, I'm just looking through my stocks, and the more boomer names tend to be doing better today. There is the Tesla and the Penn, which are up, but there's also the real winners in my portfolio. I'm looking at. I see Coca-Cola, Raytheon, Berkshire all up, MSGS, which is the Knicks and the Rangers, a name I like to talk about a little bit that not too many people know. It's not one of those high growth small cap names, but to me, it's one of those names that stays around, will be around. It's the New York Knicks, it's the New York Rangers. We suck. Imagine if at some point we get good. I am a fan of those teams as well, so it kind of works perfectly for me. So you guys definitely should put that in there when you're doing it. But I'm seeing Bowen up 2.6%, a nice Dow component. I would have to imagine that's leading the Dow, although I'm seeing JP Morgan up 2.1% as well. So I think that a lot of the FinTwit stocks, the growth, the tech, the small cap, looks like it's opened down, but a lot of the non stocks, so the non FinTwit stocks might be moving up. Although Boeing is one.
We also got on now Gavin as well. What's going on, Gavin?
Yo, what's up? Just woke up. How about you guys?
It was a rough
Living the
wake up
dream.
today. It was a rough wake up today, but we're here. We're good, and I've had 2 cups of coffee with energy. Let's go.
What was your question, the stock market news?
Well, listen. So I got a couple things. For me personally, we've talked about this a couple times. I have a Palantir call, and I think that to make this a little more valuable for everyone in general, like, when do you look to take that profit when you're up big on a call option? Is it like 100%? Is it 200%? Is it more just how you feel, or is there something in there?
So usually when I go, I buy in 100 call option pairs. I sell 10% on every 10% move. So by the time I am up 100%, I'm almost all out.
So what is your doing? Do you like do the same thing on the downside? Do you have like one like stop loss price, or do you have like a rolling one down?
So usually with options, I try to use a mental stop loss on the equity, not the option.
Okay.
Like, for example, if I'm buying Palantir 30 calls, I will cut my losses if Palantir goes to 25. I won't look at the option prices because the option prices aren't only dependent on the stock price, right? They
Mm-hmm.
depend on a lot of factors. So for
No, that
me,
makes
I
a lot of sense.
prefer to use the stock price as a mental stop loss. Because the option, right? You might see wild moves for no reason in the market when IV spikes, right? You can't predict that. So
You
that's
know what,
why,
Gavin?
yeah.
Me and Wolf and me and Gav were talking about this kind of with Facebook, and it was an expensive option, and we wanted to figure out where we should take our loss. And I was the one who was talking to him about it, and I was like, maybe we should do 30 to 40% down. I know I was talking about the premium on the options, not necessarily the stock price. So that's definitely an interesting perspective. And Gav, definitely think we should take that and reconsider what our stop loss area is.
Okay, I'm interested. So where do you think the stop loss area should maybe come in
So
at?
I think that we need all the details of it, and I love Gavin's opinion on this. Obviously, he's super informed on it. But what was the strike price for our Facebook call again?
Strike price for our Facebook call was $360.
Okay. So, Gavin, do you have any thoughts or any input on maybe like what a decent area is? I don't know the exact premium we paid for it as well, but
What's the expiry?
The expiration is 10/15.
Um, Let me look at the flow and the open. Let's see, 10, 15? Oh, okay. So 15 October, 360. So you guys paid almost 350, right? So you guys should be down almost 30% right now, right? Or even more.
I'm pretty sure that's right around where we were.
Yeah, right. Yeah, like 23%.
23, yeah. Let me look at the historic performance of Facebook for October. Give me like 3 4 minutes. I
Okay,
will get
perfect.
back. Yeah.
I got a couple stories that we can go into the meantime. I think this is the perfect time for it. I saw Bill
Hmm.
Klingman tweet at us that we got rugged, so I don't know if he's in here, but we'll see. Looking forward. Um, the last story I covered was the Cosmopolitan getting sold to MGM Resorts. I don't know if I finished it. MGM Resorts is acquiring their operations of the Cosmopolitan Hotel and Casino on the Las Vegas Strip for about $1.6 billion. The rest of the $5.65 billion coming into Blackstone is by various of REITs and a bunch of different other partners in there. It was interesting. They separated ownership of the hotel and the physical property from running the operations of it. So MGM just took the operations side of it. Next story I got in front of me, I'm looking at Nikola. Nikola entered into an agreement with Tuchman Stone Capital. This is the second of a $300 million common stock equity line purchase agreement. So what that means, a lot of words. Basically, Nikola has the right to sell $300 million worth of stock. Now it is a total of up to $600 million because it's the second of the two to this company in exchange for having money to fund their business. This is a credit line. A lot of the times you see this with debt and banks, but Nikola is taking a little bit of a different approach. It definitely shows where they're at, kind of the type of business they're at and where they're at in their business cycle. They have to give up equity instead of debt in this type of situation, but they're using their stock as an equity line to fund their business. I think that if you're a Nikola shareholder, this is expected and this has to happen for Nikola to have any chance to survive. I've always been a doubter from the days of Trevor Milton and rolling trucks down hills, but I think the fact of the matter is, although I will still always think of that and always points to it, it definitely is a different company today. I don't believe in it. I don't get back behind it, but it probably is an unfair rep at this point for what the company is left. So, you can look into it, and if they are going to survive, there's going to have to be more of this. They need money, and the opportunity in front of them is big if they can fulfill it, and the only way you can do that is to invest. So, this has to happen, and it's I don't think it's anything too crazy. But the next story I got in front of me is Lockheed Martin and the F-35 Joint Program Office announced they agreed to a new production timeline for the F-35. So what this is going to really, why this matters is it's when Lockheed delivers the planes or delivers the batch of planes is when they get paid. So it's kind of just when they're going to be getting money and what year it's going to be accounted for. You can kind of see also the earlier theme that I was talking about with supply chain problems being an underlying pinning of what's happening. They're scheduled to deliver between 133 to 109 aircraft this year, between 151 to 153 next year, and then delivering over 156 annually beginning 2023 into the future. So you can kind of see the production ramp up, and you can reflect it onto what the situation we're in right now and everything like that. Before I keep going, Gavin, are you good? I still have a couple more stories, but
Yeah,
you're
give
good
me
with
like
okay.
10 more seconds. I'll be
Okay,
done. So you can
perfect. All right,
finish it.
so the next story I got in front of me is Tesla. So Tesla this weekend, I believe Saturday, they're going to come out and give us their production and delivery numbers. They don't break it down by location. They do break down capacity by what gigafactory it's out, but I don't think they break down what the deliveries are. But Tesla China, Tesla Shanghai is expected to deliver a total of 300K cars in the first 9 months of this year. As of last month, for their 8-month run rate, it was at 240K cars. So they're expected, if you do just the simple math, around 60K cars for this next month, or the month that we're in right now. Last month, they sold about 44.3K cars in China, or China-made cars. It doesn't mean they're necessarily sold there, although the majority are within country. And then Elon, I also saw a headline this morning that he said that this upcoming week is going to be one of the toughest weeks for the production line and Tesla and everything like that in general. They're expecting a big end of quarter, end of delivery number push for getting cars out there. So it'll be fascinating to see how that goes going forward. And I don't want to. I was gonna say it's funny, but it's not. But it's interesting that the whole news with Grimes and Elon Musk kind of separating came out right as Elon's gonna have to be doing intense work, 24 hours back in the office type thing. So it's intriguing, the timing of everything, and you wonder if it's related or if it's completely separate and just doing the crystal ball. But who knows?
So the board, they want to kick out his brother, Kimball Musk.
I'm not surprised. As a Tesla fan, a shareholder, I think in general, when you have one person and one man, and your brother is an extension of yourself in this business most of the time. Sometimes it's not, but I don't know him that much. To me, it's just an Elon Musk brother as opposed to Kimberly Musk or whatever his name is.
But isn't it weird? Last week his wife left him. Now his brother, he wants him out. So
you don't know if he left his wife. Like it's the dangerous thing. You don't know how the personal stuff and anything like that works. And I feel like we see Elon Musk like when you're that type of businessman, when you're in the office 24/7, it's that classic Venn diagram. Like something has to give, and maybe it looks like maybe it's his personal life that tends to give, but as a stockholder, it maybe isn't the best thing to say, and you want for him to be longevity in this industry, for him to go for the next 30, 40 years, he does have to find a balance, but it seems like he's putting everything into his work, and some other things are slipping to the side, unfortunately.
So still watching a couple of big names. I think we're gonna get. Did the Finviz map already come out yet?
Yes, it is out. Let me go and check on that right now.
The screener.
Yes, the screener is out. So the heat map is looking. It's actually I'm seeing banks are up. I am seeing energy is up as well. Everything else looks down. Big tech looks to be leading the way down. Let me go over to the screener right now quickly. I'm going to put no filters on it, so this will give me a bunch of smaller stocks. Aslan, ticker ASLN, Evolo, and Zivo, ticker ZIVO, are leading the way down for everything. And leading the way up is Red Cat, Collect, Bio, and AirShare. Let me filter it by the way I like to filter it, with large cap only, so we get a little bit of the shit out of there. Maybe I shouldn't curse on here, but whatever. So leading the day right now, we have Kirkland Lake Gold, ticker KL, Occidental Petroleum, ticker OXY, and then Marathon Oil, ticker MRO. When I flip it to the worst performing stocks at the open, we have a bunch of China stocks, honestly, in here. A couple U.S. names mixed in, but the bottom three are Chinese related. We have Huaneng Power. Obviously, I probably didn't say that right. HNP, Aluminum, maybe is how that is. That was embarrassing. ACH, and then Futu, actually, which is, I know that's a name you're a fan of, Gav, or have been in the past at least. I'm going to take one peek over to the relative performance by sector, and I'm looking at energy actually up 2.5% so far at today's open. I'm looking back, and energy is leading over the last month. It does lose a streak at 3 months. Technology takes over as the best performing stock over the last sector over the last 3 months. But over the last month, energy is vastly outperforming the market. Energy is up 10.5% over the last month, and the next best performing sector is consumer cyclical at up 0.04% over the last month. So energy is definitely outperforming big right now. That's definitely, Gav, how long have you held that Gush ETF?
So Gush, I've been looking at since we had those hurricanes. So maybe like 3 weeks. And over the last week itself, Gush is up 28%. Over the last month, it's up 36%. That is a 2x daily exposure to an equal weighted index of the largest oil and gas exploration and production companies in the US.
It's funny. So you were saying it's definitely 3x leverage because you did 28%. I'm looking at it up 9%, 9.06% on the 1 week on this thing. So it makes a lot of sense. 3x leverage.
It might be two. It might be two. It says
Is it
two.
two?
Full
Okay,
2x shares. Yeah, but Gush is up now 11%. That was the one we were talking about earlier. It was up about 7% at market open.
In general,
But
I
yeah,
have like almost no exposure to oil and gas. So it's been one of those areas that I've been trying to go into. Like, I would love to go into the green energy type stocks, but they're just so overvalued for me that I kind of stayed a little bit away. I was able to get into Tesla earlier, and I kind of liked the energy production side of that. But I've struggled a little bit with the oil and gas, me being not necessarily favorite for it, but if you think oil and gas are going to slip away very quickly with just cars or whatever, that's not going to happen. Like, there's a lot of stuff that oil and gas goes into that you don't even think of. So that's definitely going to stay around, but it's not necessarily something that gets me excited. And then I look at the stuff that does get me excited, but it's just so overvalued, it's so expensive, and I'm in a difficult predicament in the energy sector right now. But I do want exposure to it.
Evan, do you want to go for 4 minutes now over some earnings? And then we also have, so Jim's up here. Hey, Jim, how's your morning going?
Good morning.
Good morning to you as well. And Catherine will be up here in a minute. So we're going to have Jim and Catherine, everybody hang out. We'll be going through some macro and some company specific events. That'll be in about 5 minutes. But Evan, do you want to run through maybe some earnings before we hop into that?
Unfortunately, it's a light week of earnings. I do believe we have a pickup coming soon. We're kind of firmly in that short window in between earnings seasons. Looking quickly, I see we have Aurora, Cannabis, and Micron. Really, that stands out to me. There's a couple other names in there that will stand out to some of you guys. I know for Reddit and that area, Bed Bath & Beyond was a popular one, but if any of you guys haven't heard of eWhispers before, their website is Earnings Whispers. They put out a calendar, a picture each week, and it's pretty great. There's a couple companies that try and replicate it, but this is the one they're replicating it from. So if you guys want to look at the schedule, you can look there. Quickly, let me give you guys the earnings. So expectations for Micron is EPS of $2.34. That is up from $1.08 last year and up from $1.88 last quarter. Revenue is expected to come in at $8.21 billion. That is up from $6.06 billion last year and $7.42 billion last quarter. So Micron is a very interesting company. It's extremely cyclical. I'm not necessarily an expert in this space where I want to tell you, but I can tell you what you guys have to be looking for. This is a very cyclical business. When it's doing good, it's going to be getting really big numbers. And when it's doing bad, when the environment isn't doing as good, Micron's going to have to struggle for a little bit. You've seen, as you see the history of Micron's earnings and revenue over the last couple of years, it's making higher highs and higher lows as each cycle progresses. So you just want to hope it keeps doing that. The environment looks like it's improving, and we're getting into that, overperformance time. But just know that historically, what I've seen with Micron, the best time to buy is normally when it's doing bad. I think that does stuff that's in general for a lot of stocks. So maybe we're getting to that point. But yeah, good numbers. Micron's probably the biggest name that most people are going to care about that reports earning this week. I believe it was Wednesday. But Aurora Cannabis is another one that I know a couple people care about. The pot stocks are a really hot area and people love them. I'm not necessarily the only. Yeah. You can go. What's up?
I was just going to make a mention that everything that was on our watch list for this week is getting crushed. PLTR is down 4%, Snap's down 3.65%, SoFi's down 3%, Nvidia's down 3%. It's a pretty bloody morning right now.
Yeah, it definitely is, and it's interesting because it's a lot of the FinTwit stocks. Like there are some sports betting names that are up, and Baba's up a little bit, but it looks like it's a lot of the tech names, the high growth names that are struggling a little bit this morning. So it's it's intriguing if it's a carryover from last week, really, with the Fed meeting and everything that happened on Monday and Evergrande or whatever. If that's still happening, I don't think Evergrande really was a big story to begin with, but whatever. It's interesting to see if this is kind of a carryover from that, or if this is kind of a new week and there's something new going on. I didn't really see much this morning that would come out and it signal this is the way we'd be performing. I know last night when I looked at the futures, we were up pretty big, and I think it carried into this morning. But when I looked around 7 8 o'clock a.m. Eastern, we had turned negative.
So real quick, before we go into the 10 a.m. stuff, Gavin, what else is on your radar? Anything that's specific that you're watching? And that could be options or commons or anything along those lines, Greg. All right, he might be taking a sec. No worries. Just the other things, I guess, yeah, good point with the sports betting stocks that are up. I see Penn's up. They're actually having a pretty nice day. They're up 2.6%. They're headed back towards that $80 range, which I'm sure plenty of people would be happy to see. They're up about 5.5% this week, although still down on the month. And of course,
I was expecting to see a little bit more numbers from the sports betting names. Maybe I just haven't been exposed to it that much. But starting the football season is really huge. Football season is how these sports betting companies make their money right now. This is their bread and butter. And I feel like the first week, the first game, we got some really big headline numbers. Everyone was talking about how great of a season it was. And then I feel like we haven't heard that much sense about how it's going. And, it could just be them holding up for the earnings or whatever, holding it back. It does worry me a little bit. I haven't sold anything. I actually bought a little bit last week, but I definitely was expecting to see these companies bragging about their sports betting numbers a little bit more. So who knows? Maybe once we get the earnings call, we'll see some light numbers. But I was definitely expecting us to see headline numbers, companies bragging, finding different niche metrics that they're the best in, so they can kind of promote it like that. So be interesting.
Makes sense. Cool. We're coming up right on 10 a.m. Katherine, how's your morning going?
It's going pretty well. And actually, what Evan just said kind of spoke to one of the things that I've been trying to dig into, because when you look at streams or watch any NFL game, it almost feels like every other commercial is for some betting company. And so it is interesting, Evan, that you bring that up, because I'm wondering what's the ad dollar to benefit ratio here for these companies?
And the ads must be expensive, and the offers they're making in the ads, $1,000 free bet, whatever you could do here. There is some big claims. The cost per acquisition, everything you're saying, it's got to be crazy right now.
Definitely going to make it an interesting earnings season to hear from them, at least.
That's a great point. And so, Katherine, let's go to you first. From a more maybe macro perspective, what are you focusing on today? I guess, what is the news today? What is the stories? Anything that you're kind of honing in on?
So definitely DC. As much as I hate to admit that, because I do think that politics, they can lead the market, but it's not always the story that impacts the market, if that makes sense. So I think that right now what we're seeing is a lot of attention being paid to DC and seeing whether or not, what's going to happen with the debt ceiling story and what's going to happen with the spending story. And a smaller story, though, it's been lingering there for so long that I have to think that maybe it's coming up and there's going to be some catalyst to push it into the forefront. But the way that, DC politicians trade and invest. So these three storylines, I think, are going to lead the market in a direction, at least for today's trading, but I don't necessarily think that it's going to have an impact.
I think that talks to the type of market we've been in a lot right now, where headlines will move the market no matter if it actually matters or not. I feel like literally China and crypto last week, it happens, stuff moves, and then everyone realizes this is the 10,000th time they've done that. Or like the Evergrande situation. It feels like at some point early last week, everyone was freaking out, and then people kind of came to terms with what's actually going to happen. It feels like that fits exactly into the type of market we're in right now.
It really does, Evan. And so what's weird, so I have anxiety disorder. I have panic disorder. So I tend to get panic attacks. And it almost feels like to me that I'm watching the market gear itself up for a panic attack. and then somehow walk itself back from the ledge there and kind of just swallow the news and move on. But like with the Evergrande, you really did see a full-blown panic attack here, and then everyone was like, well, it's not actually Lehman Brothers. Like, that's not the comparison to make here. And everyone was like, oh, phew, okay, we can keep going with our days then.
We're definitely in the space where people are expecting the market crash to happen and like are like, you know, predicting on it. And it's almost like sometimes we're willing it into existence where like that the type of Evergrande situation, it felt like the type of environment we're in, where like we probably are due a pullback. Let's be in realistic, but that type of situation, what that was right there, shouldn't have been the cause. So it's interesting. We are definitely in a market of overreactions.
Yes. And so that makes me wonder, you know, when looking at, you guys are mentioning some of the names that you are watching right now are under pressure. And, you know, I've been doing various I've been reading our real money contributors over on realmoney.com, like Stephen Guilfoyle, for example, to kind of better understand like how people are approaching Nvidia at this time now that it's down like 3%. And then I'm looking at like the story around Tesla Shanghai, and it's reports that it can make, the sourcing saying out of Reuters that it can make 300,000 cars from January to September, despite this chip shortage that we've seen impact, you know, Ford and GM.
And I'm seeing more coming out today that like in Tesla, in China, some of their suppliers have had to shut down temporarily because of the energy consumption policies there. So it's a really difficult supply chain environment right now. So, you know, when a company, you know, cars have a lot of parts into it. Tesla's obviously less than other companies, but still, you know, big supply chains. And when you can expand and continuously grow in this type of environment, you know, it's a difficult supply chain.
I can't hear anybody.
It's a difficult area to grow and, you know, meet demand.
Definitely. So real quick, I want to bring in, so I see Peter's coming in and out. I'm not sure if he can hear us. I think he needs to rejoin. So I'm bringing him back in. But Jim, this is the first time we're having you on a space. So really appreciate you coming up and joining. Would love to hear, you know, we talked about how you focus on some specific company events, and just would love to hear what's on your radar today, and appreciate you coming in.
Absolutely, and thanks for having me. I mean, I guess I'm a little bit different from the rest of the guys on here, but you know, I look at the world in a different way. I mean, I don't particularly care about market movements, and I really mean that. And I also don't particularly care about, you know, what people think, you know, is going to be the price of oil or the price of or retail sales or stuff like that, right? Look, I just think that in this world now today, you know, we have efficient markets, and no matter what you believe, you know, and there's a number of people today is going to say, well, you know what, I'm a good stock picker. Okay, great. We were all spoilt last year. We're being good stock pickers. We believe that, you know, we were the best thing ever. Comes to this year, and you know, people got a little bit of a wake up call to say that, you know, maybe you don't make 20% overnight every day, right? So, you know, you got to come back to the fact that these are efficient markets, and there really is only three ways to make money, and that's by knowing something that someone doesn't, and that's insider information. You go to prison. It's faster dissemination of information. That's what I hear a lot of people talking about today. Of, oh, you know what? I know the Tesla results, or I know you know what these things are going to be, and I'm going to predict this. You know what? The computer and algorithms, and we deal with funds that are large and small and all over this, have got that way before you're ever going to get there. So that's not a way to make money. The only way to make money today is by smarter analysis. So you have to look into places where other people are not looking. And what we do, and what I do, and what I've always done, is look at undercovered corporate company events such as spin-offs, things like that. So let me just give a little bit of background, and I'll give you some ideas. But you know, you'd have seen a lot of these company events go through, but you probably didn't look at them, right? Match.com was a great one. You should have got on, okay? Match.com was a release of value. What did we know that someone else didn't know? Well, we knew the stock was coming up. We knew there was different management. We knew a different valuation, and the rest is history, right? Again, big stocks. These are not small stocks. UMG, Universal Music Group, spun off of Vivendi. 38% on the opening day. You know, you're getting stuff here that is going on in the background, and if you're not looking at this space, you should be, because this is where real undercovered value is realized. And it's not about predicting, any earnings results. It's about predicting what is the release of value. Someone mentioned Bed Bath and Beyond. We replaced the board in that stock. They're all taking money. There's a release of value there. There's a release of value in the another one, Victoria's Secrets, split into two. Great names to even buy right now. So what we're seeing is a lot of these corporate events that perhaps some of the listeners should be looking at. And that's the only way you're going to make money today is being smarter than the rest of the market, because the markets are efficient. Okay, you're not going to make money any other way. So look at catalyst events which kind of change the face of the actual stock. And long term, you'll be a winner. You won't need to worry about whether the market goes up, because ultimately the value is going to be released within that stock. Classic one, if you talk about SPACs, you might be interested in SPACs. Playboy was one where I highlighted before anybody highlighted. It's on the blog, in my Forbes blog. Look up Jim Osman Forbes. It's because we saw a release of value and a transformation of the company. And again, this is what you should be looking at in forward thinking. If you're looking at companies to invest in, you should be saying, how does that company change? Harley Davidson was another one. I had a lot of people say to me, Jim, no one drives long-handed motorcycles anymore. No, that wasn't the point. The point was they're changing from old school to electric bikes. And then you can't buy a Harley. And they're in demand. So look at companies which are transforming in this environment, not stuff that is you're looking at the rear view mirror, which you're saying, okay, yeah, these are great and they're going to be great because, everybody knows about it. If everybody knows about it, you are not going to make money out of it, okay? And this is something I report on the feed and I tell everyone the whole time, including, bigger investors. So what is your edge, essentially, in when you invest? So I just wanted to give you that little bit of background in terms of the way you should be looking at the world today, because it's not easy, right? And anyone's saying I'm making 20% returns like the end of last year, you're lying. So that's where I want you to look, and that's what we look at. We look at corporate events, we look at spin-offs, breakups, change in fundamentals, change in management, and if you can do your homework on some of this stuff, you'll be better off longer term. You won't need to worry about big market movements. Whether the market's going to fall or not, I don't give a shit. If it falls up or if it goes up, I'll sell some. So that's my view on the world. So I just want to give that overview on how I view things, which is a little bit different, I think, to the kind of macro feel that I get a lot these days.
That's a really interesting and unique perspective that I don't know if we've necessarily seen on the space before, but I love the idea of focusing on the specific because a lot of people, even on this space itself, take very different approaches. Mm-hmm. There's very fundamental approaches. Peter's entirely, or pretty much entirely technical, and then you're kind of coming at it from really a third perspective to the market. How did you develop that perspective?
Yeah, I mean, look, listen, but I've invested in stocks for over 25, 30 years, and I've always been slightly, I don't know, kooky is the word. I don't like to think myself kooky, but I like to think I'm against the mainstream, because that's the way I think. I'm a contrarian by heart, and I believe that certainly in today's efficient markets, and let me get that word again, efficient, they are efficient because computers and algorithms will get there before any brains, and you've got to understand that. So how do you beat that? And I'm always looking for ways to create value for our clients and obviously myself as well. And so I'm looking at undercovered areas where you just need to do that little bit more work than the rest of the 80% and find out whether there's value or not. So, like you say, I wanted to make that point because I appreciate that everyone is slightly macro here, and that's great, and people make money from that, but it's not for me, and I've never been concerned with the way markets have moved. And there's three things that move markets: is emotion, it's crowd behavior, and it's fear and greed. If your trade is any of those, or your investment is any of those, just stop. Okay, just stop and take a step back, because you're going to lose, or you're stacked up to lose. If everyone was getting in, and then people are going to hate me from saying this. I looked at BBIG, everyone was pushing that like at $13 or whatever, and I was like, this is awful. This is the worst thing ever, and the thing collapsed. Because everyone's in it. So you've got to be careful of how many people are in your trade. Are you thinking differently? What's your edge? And if you can determine that, long term, you're a winner. Some ones you're going to lose. I'm not saying we're going to win every trade. We're going to lose some. But if you make more than 50%, you're winning. And it's as simple as that. So try to manage your risk, is what I say to people, rather than manage your P&L. And that's a big difference because people are emotionally driven by when they see red numbers on the screen. And that's a problem for a lot of people. So I'm a big one of people follow the Twitter feed, see, I'm always talking about emotion and emotion in your trades. Just get out of it, really. It's very hard to do that. But that's kind of my perspective of the world. And like I say, it is a little different.
I definitely agree that the less you trade with emotions and everything like that, you're going to do better. But I do just want to push back on
I am here, Gav.
On the perfectly market efficient theory. Like I do agree over the long term, markets are perfectly efficient. Everything works itself out where it should be. But I do think in the short term, you kind of hit on the point of it. A lot of people trade with emotions in this market. It's not necessarily that they should or that they do, or that it's a good thing and they're not. I don't think they're going to make money from it, but I think it is a fact that they do. Like we see the AMC, the GameStops or whatever. Like, and through the long term, are they going to be able to stay at that point? I don't personally think so, but so I definitely agree that over the long term, markets do work out. But 2020, 2021 has really showed me more than you kind of knew in the past that there definitely is the short term overreactions, and it takes time for the markets to be efficient. Like the computers get it in right away, but sometimes it takes the everyone else and the emotions and the people a little bit longer.
And I agree with you, and that's why I think where the listeners and regular investors, I say regular investor because I'm a regular investor, we look in the right places. So if you look at places like spins and you see value creation that computers can't work out over the spin, they can't work that out. Even options, I traded options, for years as one of the biggest option trades in London, but it's they option models don't understand the fact that there's a change of over a date on a spin-off. They don't understand. So you can capitalize on that for a start. So there's lots of opportunities where you can get ahead of the mainstream. One, Harley Davidson, Bed Bath and Beyond, set up a Victoria's Secret, UMG. They're all value creation. We can work a regular guy to do that.
Real quick, I think there's some sound coming in. Peter, I'd love to bring you into this conversation. Just in between to all the speakers, whenever anyone's speaking, please do mute out because otherwise there is a lot of feedback. Sorry, Jim, your mic cut out for me for a second, but I hope I didn't speak over you at all.
I just want to make sure we give people enough value to, I want people to make money. I want you to win. And be looking in the right places and don't get caught up in a crowd mentality. If you're in a crowd and everybody's in it, but it cannot move. The same way, if everybody sells, there's no one left to sell. You have to buy, right? So you got to keep that in mind when you're putting your investment. What is it that that the rest of the crowd don't know? Okay, that's what you got to say to yourself. And if it's nothing, and if you're just getting into it because you think no one cares, and the market has a great way of fooling you and taking your money. That's why it was set up. So just have a think about that. And let me just highlight a couple of ideas that have gone through recently, if you'd like. Would you like that?
Yeah, I actually would. What I'd love to do is just maybe have Peter come in on some of your points that you've already hit on, and then if we could come back to you with those, would that be okay?
Hey guys, Peter here. How are you? Great to hear Jim. I respect what he's talking about, and I think being nimble. Look, I agree. Following the crowd, following the herd, hope is not a strategy for trading. That's key. That's why I'm a proponent of technical analysis. And he talks about the edge. The edge is key. That's what I've developed here with my business here on the floor of the stock exchange. The markets are efficient. They are able to handle any information, whether it's economic data, Federal Reserve, pandemics, whatever. The markets do equalize. And the markets do tell us what they think of the information. People keep talking about a crash, yet the market keeps going up 250 points every day in the eyes of the pandemic, the Delta variant, the Federal Reserve, economic global shutdown, business models and companies that are trying to reopen that are questionable, yet the market continues to go up. I am not here to analyze, tell you, recommend stocks, be your financial advisor. I'm also here, Jim, and I really respect everything you said about working with the edge, right? Technical analysis in my world is the edge. Also, I respect what Jim said. Once you've heard it on the internet, guys, that train has left the station, right? There is a majority of people, the day GameStop went, the day AMC went from 20 to 40 to 62, right? And went after hours up to 75. And the next day they issued a secondary and it opened at 40, right? 400 million shares traded, right? 92% of those shares were traded above $59. That means when it opened at 40 bucks the next day and everyone thought it was going to the moon, they were all losers. So I really respect what he's talking about, right? The edge is key, doing your homework. I do want to hijack the call a little bit because I got a couple people who I've invited in here. You know, guys, I don't really recommend crypto, and I've been sort of dabbling in the NFT space, but I'm on the board of a company called My Social Canvas and Boss Beauties. And you see a couple of the people here on the call. You see Boss Beauty, you see B. This is a company, My Social Canvas is a company to empower Gen Z girls and women, right, to create a community and empower them, mentor them, coach them. And so as one of the projects that Lisa Meyer, who is the CEO of My Social Canvas, did was to create Boss Beauties. Boss Beauties is the sort of the economic and the NFT arm of My Social Canvas. And yesterday, they launched their 10,000 NFTs, and they sold out $4.2 million in 90 minutes. So I beg all of you on this call to go check out Boss Beauty on Twitter. Go check out this NFT. It's absolutely amazing. There were 10,000 individual NFTs with characteristics of powerful women, right? Let's be clear, men and women on this call, powerful women are the shit, guys. So whether they're in finance now, whether in the NFT space, Lisa Meyer's one, B's one, and literally, guys, 10,000 NFTs sold in 90 minutes from Boss Beauty, raising $4.2 million. Now, the last thing I'll say about it is, and it goes to Jim's statement, though, you know, there are a lot of NFTs out there with the apes and whatnot and the spunks and the punks that are just a matter of art that's going to be making money. What I found, and Kevin O'Leary highlighted it over the weekend, was the fact that NFTs that come along with a physical entity or with a mission behind it are really the way of the future. Katherine, I'm going to discuss this with you on the side. I'd love you to do a story on Boss Beauties. But guys, their mission is they raised money with these NFTs. They're going to use that money to mentor, to coach, scholarship, empower young women all throughout the world. And you know what? That's where we can use our edge, in my opinion, as somebody who's been around for a while. You know, making money's fun. The stock market is great. NFTs are cool. But as Jim described, there are companies that have a bigger purpose. There's things that live in the nooks and crannies of these companies. Companies that are nimble, are changing, are flexible, are taking advantage of the new space that's out there and doing things that's cutting edge, right? There are a lot of companies out there that are just doing what they always do. And they're going to sort of, you know, they're going to trade horizontally. But we've seen companies that have really become nimble in the pandemic COVID space, right? Have gone out there and done broader things. We're seeing things in the crypto world that way. We're seeing things in the NFT space that are tying a mission and a message to what they do. And I think that's the way of the future. So the market's up 250. Check out Boss Beauties, everybody. It is kicking ass, cutting edge.
Got the account up here, Boss Beauties. Would you like to speak?
Yeah, I'd love to. Thanks for having me. And Peter, thanks for sharing Boss Beauties. So I'm Lisa, and I'm the founder of Boss Beauties. I'm the founder also of a company, My Social Canvas, that I've been running for many years to empower women. So I've been in this space for almost 10 years, you know, providing mentorship and scholarships to women. But kind of my story is with My Social Canvas, you know, the pandemic hit us really hard as an organization. And, you know, we wanted to pivot to be able to continue to educate and mentor women and provide scholarships. And so we saw the opportunity with NFTs and we researched it extensively. And then we realized a way that would be still authentic and really authentic and genuine to, you know, achieving our mission. to get into the NFT space. So like Peter said, we launched 10,000 Boss Beauties on Saturday at 1 p.m. and at 2:30 they sold out. So we're so thrilled. We're going to do a lot to mentor women, and we're setting up a scholarship fund. We're up there on OpenSea right now, right next to Bored Ape Yacht Club and CryptoPunks. We're like right there, which I'm going to say it's a huge honor. I mean, having, Visa just obviously got a CryptoPunk, and Arizona Iced Tea went in on Bored Apes. Companies, brands are getting into NFTs as well. And so it's a huge honor. And yeah, I mean, this is a movement. You can check out the stories of the women in our organization. We have videos sharing, what our organization means to them, like how we've impacted their life. But check it out, and we'd love to share the story, with anyone who wants to connect. And I don't want to hijack the call here, obviously, so I'll hand it back over to everyone. But would love to connect. This is really my life's work and my passion, and I'm just excited we can leverage NFTs in this space and generate wealth for more women getting into the space and people that are getting involved in our movement and our project. So, and also we're educating women on how to learn about NFTs and crypto. So another really cool thing, and then I'll hand it back over, but we hosted an NFT education event with Vayner NFT. And as you know, Gary V and, Vayner are leaders in the space. So we partnered up and we hosted an event where we taught women and girls, from college and high school about NFTs and crypto and everything. So yeah, that's our story.
So I would love to jump in quickly. Me and Gav have been getting to know each other better and better as we've done these spaces, and he knows that really.
Lisa, I'm so happy you guys are on the call. And B, guys, from the financial point of view, look, I've been in this business for 35 years. Women were not a big part of finance for so many generations. And now to see women like Stephanie Link and Missy Young and Stacy Cunningham, the CEO of the stock exchange, and to see women come into finance, and now to make an effort to educate. Look at Gav and people at Wolf Financial. They are young men in their 20s who are total gangsters in the financial space. So to add women into that space through this organization, to get young women be educated in business and finance and law, right, to come in to learn about NFTs and get super gangster about finance is an amazing opportunity. We at Boss Beauties and My Social Canvas are doing mentorship programs with some of the most powerful women in finance. Stephanie Link and some other people who are trying to bring on board for this thing, but we're doing podcasts and whatnot. Women are the next generation to kick ass in finance, guys. NFT is a great vehicle for it, and it's a really fun thing for you all to invest in. So check it out.
All right, quickly, just what I was saying before. First of all, Peter and myself can never seem to hear each other. I always hear him, but he can never seem to hear me. So it's a weird glitch we always have. But for me, NFTs have been kind of coming a trigger word. I've been seeing all these projects come out with no real utility behind it, just from companies trying to, what I feel, just kind of community, build a quick thing. So I'm really awesome and happy to hear that there's actually some projects coming from more projects coming from real companies with a purpose on the back end. And that's the type of stuff that, I don't want to be talking about NFTs in general on these spaces that much anymore, but these are the type of projects that I'm totally fine and would love to keep talking about. We would love to have you up in the future, maybe talk about, how it's going, some of the stuff you've been able to do with the money raised. I know that NFTs are really great because you can continuously raise money going in secondary transactions on OpenSea. So it'll be fantastic and awesome to see how you guys can keep going with this great mission. And I'll be looking to buy into one off once the spaces is over.
Can you let me in? Thanks. Yep.
Awesome. Peter, are you able to hear Evan or no?
I wasn't here. Can you hear me?
Yeah, we can hear you, but I'm not sure you could hear him.
I was moving to a space where I could hear you all. No, tell me what Evan said, please.
He was just speaking about how, there's a lot of NFT projects that are going on now, and unfortunately some of them are more just non-utility based, but that this clearly has a purpose, right? It's for education, it's for utility, for inclusiveness, for promoting, and empowering the woman. So he was just saying how he's definitely, more supportive of this than some of the ones that we've seen, and how we'd love to have maybe a check-in in a month or two and see how it's going.
I appreciate it, Evan. Thank you. Yeah, it's really important to me. Look, guys, there's so many projects out there. There are people thinking, this is a get rich quick thing. And, all power to them. Let them enjoy it. It's fun. Art is a great vehicle for that. But what the opportunity is, and as I highlighted it, because O'Leary said it too over the weekend, that, he's doing it with physical entities within the NFT space, that something is tied to something more than just a picture. But, I'm launching an NFT project. It's going to be one that's linked to financial literacy, financial independence, and financial education. It's coming out in a few weeks. Of course, I'll let you all know about it. But this was one of the first projects. I've been with my social canvas for a while because I love their message. I do have a Gen Z daughter, and I know all the trials and challenges of being, not that I'm a 15-year-old girl, but I surely know the challenges, one of having one in my household. And so then to take this wonderful vehicle that everyone's into, you know me, I love the fact whatever brought people to us here at Wolf or on Wall Street, whether it was the meme stocks or crypto or this and that, we've got so many new eyes on us, and a lot of them are younger, right? So how cool is it? And so many of them, I go back to what the gentleman before me was talking about, that people are getting blown up in the market because they're not doing their homework. They're following the crowd, they're following the herd. So if we can educate people, we can have a really good message, we can have a mission tied to a vehicle that people are enjoying and trading. How cool would it be to launch 10,000 NFTs, sell them from zero point zero 0.01 Ethereum, they're already retrading at 3.4 Ethereum, raise $4 million that is not just going into somebody's pocket because they're greedy and they just made a bunch of money, but this is going to be spent on scholarships for young women to teach them about finance, to help empower them, to set up mentoring programs with women CEOs to learn about finance, trading, and all that stuff. How exciting is that, guys? That's what this shit's all about. It's the next cutting edge. It's all fine and good to sit at home alone with a bunch of money in a fancy car, but to be actually this is my message. And I'm going to keep it on myself. There's nothing more important to me than bringing everybody along for the journey, everybody being independent and successful, and everybody having a lot of fun here, joy in this friggin' life. We're not here for a long time. We're here for a good time. So dig it.
Absolutely, Peter. So Jim, or Evan, I can come back to you for a second. Are you okay if we go to Jim?
Yeah, all good. I just, thank you guys for coming up here talking about the NFTs. I love it. We love to get these conversations in, and I'm excited to keep going with some stocks.
Definitely. So Jim, you mentioned that you had maybe a few more specific cases that you wanted to go over beforehand before we went into the NFT talk. I'd love to bring it back to you for those.
Yeah, thank you, and I appreciate your comments, Peter. Listen, I want to more. Everyone's a stock picker, right? You say everyone on here, they're going to tell everyone I'm a stock picker and I'm good at it, okay? And most people are. Most people will get something right. It's just a matter of timing. And everyone is always right. It's just a matter of time. It's as simple as that. How many times have you traded and then taken your stop and then it's gone the other way and you've gone, I knew I was right about that, right? So I just want to try and educate people on making sure they don't lose money. And they always want to start with what's the risk, not the upside, not the P&L, not the hope of some sort of big profit. Start with manage risk, and just a few snippets today on that sort of basis. But I certainly got some ideas for you. And like I said before, for those who come a little bit late, you should be looking in the space where there's some sort of corporate change with the company. And that could be management, that could be a spin-off, that could be a restructuring and anything like that. And like I say, just the names that went through recently, Match, Victoria's Secrets, Harley Davidson, all these kind of names that you know of. And but do your homework. Do your homework. That. Yeah, go.
Can I hop in and just ask you a question there? So you're talking about the corporate changes and a lot of stuff, and I love that. I want to know, what is your thoughts on M&A in general, like in this perspective? Because when you look at the numbers of how M&A actually does whatever in the future, it tends to normally not do that great. So I would love to get your opinion on how M&A works into this as well.
Yeah, absolutely. You should not get involved in M&A because the spreads are. Because here's what I don't like about M&A. I don't like trades. I don't like investments where there's a tiny bit of profit for a massive amount of risk. Now, what happens in M&A or risk arbitrage, as most people call it, and they put the term special situation on that. It's not a special situation for me. Buying one stock to sell another because they become one down the line, trading the interest rate and a massive piece of risk is not a trade for me. So you're absolutely right. And again, algorithms and computers will get there so much faster than you and put out anything, put out all the edge, and it'll be gone. So my advice is don't get involved in risk arbitrage. And you know what? When the market falls, risk arbitrage trades are the first trades to fall apart. And you see that in Paulson funds, people like that who just got carried out in those sort of trades over the years because, deals fall apart and people get worried when market falls. I don't want that risk. I want to know when I buy a stock that it's fundamentally cheap, it's cheap for a reason, and there's particular upside because of a corporate event. Now, would you rather take that trade or a tiny, tiny bit of spread, putting it on a zillion times and hoping that this deal closes sooner rather than later, right? That's my view.
Thank you. No, I appreciate that. Appreciate that, dude. I would love to hear some of the other names you were talking about before I interrupted you.
Yeah, absolutely. You feel free. I mean, any questions you want from anybody, I'm totally cool with that. I just make sure that people investigate the stuff and realize the risk of what they're doing before they do it. That's key.
So Jim, I do have another question, and then afterwards I'd like to go to Catherine. Jim, one of the things that you mentioned was having an edge, right? Being able to, and just all the speakers, please do mute out when you're not talking. I think I was getting some feedback there. How do you get that edge for somebody that maybe doesn't have access to even a Bloomberg or to some other area? Should they just not be trading? Like you talked about how people need to get that edge, right? They can't just everybody knows it or I have a hunch. What can they do to put themselves in a place where they can competitively trade and profit?
Absolutely. Well, look, there's a massive sell for what we do, right? We have a $99 product for the smaller investor. We do all the analysis. I have a team of analysis. We've been around for forever, and we look in that space, right? So if they want to do it on their own, there's a couple of places. One, you can follow me on Forbes. It's free. Jim Osman Forbes. Look there. There's a load of ideas there all the time. I'm producing stuff, right? That's free. Secondly is Twitter feed. I'm posting stuff up there, various kind of stuff amongst my dog pictures. Bear those, and there's some gold in there. And thirdly, they can do their own work. I mean, Google spin-offs, Google restructurings, Google all these terms, management change, and if they can understand what's going on, and they can think about, well, how does this stock going to evolve, right? How do I know that this stock's going to change? What's going to happen? What's the value creation over a spin-off? If they can't, if they're fundamentally orientated, they can do the numbers pre and post spin. If they can't, they come to us. But that's the sort of thing they should be looking at. Just look for stuff that people aren't looking at. Like I say, you all know Match.com. How many people looked at it? I suggest no one on here looked at it. How many people looked at the Victoria's Secrets breakup? Everybody knows the stock. They pass it every day down Fifth Avenue. Who looked at it? Probably nobody. So this is the stuff, even UMG, spun off of Vivendi, one of the biggest media stocks in the world. UMG is going to be a Facebook of the future. It's not even listed here. It's listed in Amsterdam. Bill Ackman took a big slice. He'll spin it onto the market in 2 years' time, and you'll all buy it. So a high price. So look where other people aren't looking. That's what I want to urge to you. Don't follow the crowd. Don't be emotional about stuff, and manage the risk. That's where people should be looking.
Wait, I would love to jump in there quickly before we throw it to Catherine. I got a couple things. First, make sure you follow all our speakers up here. We've had a really great conversation, and we always do. I think this is probably one of our best panels I think we've had. So, we're really lucky to have these people up here. In general, I think that, with what Jim was saying, I do kind of agree that you're not going to be able to get to that initial news story. If you're trading off a news event that you saw on social media, most of the time it's too late, if not all the time. But there is an opportunity a lot of time to trade off the overreactions to news events where, something happens, people over exaggerate between it. And then there is that opportunity in there for those traders to come in. So I definitely think that if you may have to change your perspective a little bit, that instead of trading around a news event itself, your goal is to trade around an overreaction to a news event. And there could definitely be some possibility for opportunity there.
And that's absolutely right. But before that, you need to know the valuations of your names, right? If you're not clear on that, you will get emotional. You'll worry about stuff. Something will come out last week like that China thing. I didn't pay any notice to it, to be honest. But something will come out like that, and you'll be like, hey, I've got to sell. This is Armageddon. I know people sold their 401ks on the back of that. You know, this is a disaster for them in the future. You know, I'm always fully invested, if not a little bit cash, but because I know my stocks. So you just got to, as long as it comes down to emotion again. If you're sure about what you've done and your homework, okay, take a stop. I've taken a stop before. That's no problem at all. But you're going to be absolutely sure that over time, you're going to be a winner on that basis. If you've got a book full of hopeful names and they're all hopeful, oh, I think this is going up, that's going up, you're going to lose on a market downturn because they're the first stocks that everybody sells and you'll get carried out. That's the problem with a lot of the nimble guys that I deal with today.
Awesome. No, I appreciate that. I know that quickly with the Bullish Rippers account, we're getting it back up here. I don't know if you guys, everyone else can see the green raccoon. When I said last, make sure you follow them as well. Goff said a little earlier, they were nice enough to supply us with some money so that we could do our trade of the week. We can give you guys lessons, and we could be the ones making the mistakes, losing money as opposed to you all. So that is really the goal there, is to teach as much as we can, get lessons, and pass them along. So hopefully, at least one person, one or two people can come in here and, save some money on a trade. But Gav, I knew you wanted to throw it over back to Katherine to give a question.
Yeah, definitely. So, Kathy, just wanted to bring you back into it. So, maybe two-sided. One, perhaps if you have any thoughts on this idea of finding the edge, being sure that what you are trading off of isn't a hunch or just something that everybody has access to, but rather maybe a little bit more classified information, something along those lines, but, not classified like insider trading, but just so you went out and found something. And then also, just on the other side of that, you're always diving into retail traders and that whole world. Just interested in what you're poking into this week within the retail trader world.
So on your first question, I mean, obviously I can't give any advice because I'm a journalist. So when I approach that, I would say that there's a lot of validity in saying that, and saying that you shouldn't be trading stories based on the biggest news items. And that's the same thing that we've been talking about with IPOs, right? Like, retail investors aren't going to get the first look at an IPO or a SPAC or any of that. So of course you should approach anything with caution and listen to your financial advisor if you have one, confer with your friends if you want to. And from a journalist perspective, I mean, it's hard nowadays because the news always hits the wire so quickly that it sometimes the story isn't even fully fleshed out. I mean, we saw that just a couple of weeks ago. I don't even remember the story at this point. It's been so long, but a story hit the wire. It was wrong. Oh, it was the Walmart cryptocurrency story. The story hit the wire. It was incorrect. And yet we saw major publications run with it. So of course, always, always, always do your own research with any story before you want to invest. And then I'm going to leave the advice up to Peter and to Jim and to you guys, because I think you all have sound heads and people should be listening to you guys.
I'd love to say something if I could, Will.
Yeah, of course.
So, I mimic everything Katherine said and Jim said, and it's really, we're in a dangerous period of time in this. We're in a dangerous period of time in this market where you've got 40 million new retail traders who really think that hope and listening to the internet are a way to find financial advice. There are a slew of apps out there where people are sharing their portfolios. People are just wanting to mimic each other, thinking that these guys are good performers because they're good stock pickers. Being a stock picker is, look, there are some good ones and there are some other ones, but following someone into a trade that way that's on the internet you're actually hearing about is a way too crowded trade. And I really have to go back to Katherine and I discussed it about technical analysis. Look, what the internet is good for now, and the Wall Street bets and the Reddit and all the chatter and the headlines and the news is good for, is to get your attention on a stock, right? And to look at it. But the only reason that long-term investing is a different thing, and I'm not going to address that. I'm talking about trading and trying to make some money and scalp the market, which is what some young retail investors are trying to do. They're still at home. They may be out of work. They're new in the market. They think they have diamond hands. They got into it at March 2020 and they made a bunch of money. I will testify that 80% of the people who got in then have blown up their accounts by now. So what I beg people to do is to learn technical analysis. It gives you the edge that Jim is talking about from my perspective. Jim's edge is different. He's telling you to educate yourself, look in the nooks and crannies, the stuff that other people aren't looking in. By the time you hear about it as a good trade on the internet, as I said, that train has left the station. But use the internet as an information highway to find out what stocks are trending, what's interesting, and then plug them into your technical analysis charts, guys, and let the price action determine when you get in and get out of a trade, even from a long-term investing perspective. Technical analysis will help you get an entry point into a stock as a trader or investor. Me and Catherine, we can't advise you, we can't pick stocks and all that stuff. But what I keep saying to everybody on a regular basis is, guys, if you learn technical analysis, you're gonna DM me and go, Pete, this thing's setting up for a beautiful trade. I did the homework. I learned from you and or David Green or whoever the heck you go learn from. I don't really care. But it's like I looked at the stock. There was a lot of wild price action. There's news and headlines. That's all BS. But I plugged it into my technical analysis. The RSI set up right. The moving averages are right. This is a trade. This is a trend trade. I love it. And I love when people will come back to me and they'll tell me what they think when a trade sets up. That's what I want, right? It's like, I can give you a bunch of food if you're hungry, but if I build you a farm, you're going to go out there and friggin' make food for everybody, you and yourself, right? So we need to I'm taking this opportunity. I'll keep the focus on me to educate people on things. As you know, I don't invest in the stock market myself. I can't advise you, and I'm not your financial advisor. I'm here to analyze why this market in this time, because I've seen thousands of people come into this market, think that this is a get-rich-quick scheme, and get their accounts blown up really fast, buying GameStop at $483 friggin' dollars, guys. So, but if you go ahead and spend a couple of hours and learn it yourself, that's the aha moment for everybody, is when they're able to say, oh, wow, this looks like a trade that's going to set up for the right reasons. Not because I heard it on Wall Street Bets, not because everybody's talking about it, not because they're predicting good earnings and all that. This is not your grandfather's stock market, guys. This is a market that's volatile. The liquidity is questionable. It's moving like crazy, but it's really busy and exciting. And if you do the homework, you're going to be able to sit at home and make these decisions for yourself, right? Learning is the key to this thing. Educating yourself about technical analysis, about markets, about, as Jim said, looking in the nooks and crannies of companies that everyone's not looking at. This is a muscle that you got to sort of, massage a bit, right? And you'll figure it out. You'll have your aha moments.
I couldn't agree more, and it seems like we got a lot of agreement in there. So, Catherine, I know that you have to hop off, so I just wanted to give you a minute or two just to anything else that people should be checking out. And obviously, everybody should be following Catherine. If you're unfamiliar, she is one of the preeminent women in this finance journalists, the greatest in the space. Hosted with Jim Cramer for years. Hopefully, we'll be doing some spaces with the street and yourself and some other stuff. So, looking forward to all that. But anything else everybody should know?
Y'all are too kind, first and foremost. But anyway, so while we've been in the spaces, it was interesting because there was a story that crossed the wires that Michael Burry says that he was subpoenaed by the SEC. I'm curious about this just because we heard